Good morning, traders. Welcome to today's market review. This is Fred Razak at CMTrading. Today is April 4, 2022, and today is Monday morning. So looking at the highlights of the day, the market's really taking a breather after last week's NFP coming out of the United States. We're going to take a look at that in just a second. There's no major economic events scheduled for today, but as we move in the week, we've got a bunch of things coming up. But first, looking at the markets, the Forex symbols, we're watching the Australian dollar still showing some strength at the top of its range. It's really teasing us at that breakout level. However, looking at the indices, the Dow Jones and the NASDAQ, they both take a breather and retrace last week. Now looking at commodities, gold and oil slightly lower, but nothing really to, make a big deal out of. Looking at the stocks, the tech stocks were the ones that retraced the most last week after hitting their resistance-ish level. Now lastly, looking at Bitcoin, unchanged going into this week, and I do expect lighter volume. So let's take a look at the markets and see what we can expect from today's trading. Okay, so this is really after the storm. Look at this consolidation. We've had this consolidation quite some time. Okay, this is a 4-hour chart. If we look at a daily chart, it gives us some perspective. And we've been in a really tight range ever since we've retraced from our 114-ish level down to 108. That was the onset of the war, but we're right there. We're still, not much higher, not much lower, okay, but more inclined to go lower if things turn worse, okay? There's more precept to think that things are going to go worse than they're going to get better, and they may just get worse before they do get better. Now looking at the Gbp Usd, also just at that bottom range. However, look at this, look at the Aussie USD really teasing us at that top level, at that 75.11-ish level, not breaking higher. I would love to see this really break out higher. If we look at a 4-hour chart, you could see it didn't retrace at all, okay? Just trading between that 74.73 and 75.11-ish level, maybe up to 75.36-ish level. And look at the daily, we've been in this very, very tight range. I mean, let me just highlight that for you just to show us, how long we've been in this really tight range. We had a really nice move upwards. Now, on a specific level, we're still on the high side, okay? We do have significant resistance right here, as you could see, as we've hit this before, okay? But it does need some oomph. It does need some incentive to push us higher, okay? So just keep this in mind. If it doesn't push out higher, we could see it retrace, okay? That's part of trading. We see, things just not, carrying through and pushing it higher, and then they retrace. You've got to keep a very tight eye on the volume. The volume is going to be the best indicator right here to give us some perception as to which way it's going to go. Okay, even though it does break that 8-day moving average, as long as there's some sort of catch up to it, catch up to the 30-day moving average, I don't see us going further down. Now looking at commodities, let's take a look at gold first. Look at this, all right? Just really sideways trading. I mean, we've been in such a tight range, 1940 to 1919, 1900 even. At one point, we hit 1895, but you could see that the markets are consolidating. We're off of our all-time highs by 100 points, 120 points, 130 points, but ultimately, it's still not retracing, okay? We've got to see some sort of something turn in the market, and everything is geopolitically connected to, okay, with what's going on between Russia and Ukraine. Now, looking at crude oil, also just teasing us at $100 a barrel. Now, we did hit 130. That was the craziness at the beginning of March with the onset of the war, but after that, you could see pretty much that we've corrected ourselves. Now, looking at the individual stocks, okay, after looking, first let's look at the indices. The Dow Jones trading at 34,772. We did sell off last week. We did break our 2 moving averages, okay, but still not breaking that 8-day moving average and staying below it. That's what we're looking for if it's going to correct itself to go back to that 32,000. Now looking at the NASDAQ, also did retrace, did break both of them, but did not break the 30-day moving average on a daily. So, okay, so we're still relatively strong, at least for now. Okay, let's see what's going to happen at the balance of April going into May, when we do have more of the major stocks like Microsoft, Apple came out, but most of the major stocks are coming out with their earnings report. So that's going to be a really very important indicator as to which way the market's going to go. Now, looking at the individual stocks, they're trading with the actual markets. Okay, they're not getting softer than markets, not getting stronger than markets, but you could see pretty much how they're trading together in tandem with the market. That's Microsoft retracing a little bit, Facebook retraced a little bit, Apple retraced significantly, 74 from $79 a share. That's a $5 retracement. Amazon also retracing after hitting that 395, okay, which is the high end of it, okay. But all of them, if we look at a daily chart, they're all at the top of the range. This is Amazon, less striking here, but if we look at Microsoft at the top of its range, right? We hit 315 once before. If we look at Apple, that's a triple top almost, okay? We're making that top at 181. We didn't hit 181. We hit close to 180. But this is really an important level, okay? Because either it's going to break out or it's going to go lower. The chances it's going to go lower, and your higher probability trade is actually to think about shorting the top of this move right here, okay? It's not a perfect entry right now, but last Thursday probably would have been a perfect entry, okay, giving you that little space where it is right now, okay? So if we do get like another little rally, okay, and it doesn't push above 181, that might be a indication we're getting softer, okay? So keep that in mind as we're going into this session. Now, lastly, looking at Bitcoin, all right? It's trading at 46,000. It's consolidating. It's steady, all right? Not trading lower, not trading higher, and just trading sideways at this, let's call it upper range, okay? It hasn't really broken out because I would have liked to have seen this continue going on a diagonal move, and it's not doing that, okay? So it's just trading sideways right now. So as most of the markets is trading sideways right now. So today, as a Monday, might be a little bit lighter volume. A lot of geopolitical issues still in the background of everything that's happening, all right? So we'll see you here tomorrow on the Daily Review. Thank you.